The Employees Provident Fund recorded a 7.6% lower total investment income of 13.5 billion ringgit for the third quarter of 2019 from a year ago due to operating in an uncertain and volatile market that has worsened since 2018. EPF's Deputy CEO for Investment, Datuk Muhammad Nasir Abdul Latif, said in a statement that its domestic equity portfolio, which recorded income of 2.57 billion ringgit, was affected by weak earnings growth in the local equity market that saw the Malaysian stock market decline by 5.3%. The poor sentiment came from weakening market conditions, uncertainties over the US-China trade war, Brexit, political instability in Hong Kong, and geopolitical tensions in the Middle East. However, Nasir says the EPF's diversified portfolio, which includes investment income from overseas markets, helped to mitigate some of the impact. Equities contributed 7.47 billion ringgit in revenue, followed by fixed income at 5.33 billion, money market instruments at 450 million, and real estate and infrastructure at 250 million. Nasir says the EPF remains cautious about the outlook for Malaysia's economic growth as prolonged trade tensions continue to hurt export-reliant economies, while rising geopolitical risks continue to add pressure to the global economy. He also expects near-term market uncertainties to persist, which is reflected in the EPF's performance, and its outlook remains prudent. However, on the upside, Nasir says volatility provides the fund buying opportunities as it is always on the lookout for fundamentally solid assets. Transport Minister Anthony Loke says the Civil Aviation Authority of Malaysia will be further empowered financially and through a wider scope of powers to act in the best interest of the aviation industry after it absorbs Mavcom. The recent cabinet decision to consolidate the functions under Mavcom, which regulates commercial and economic matters, and CAAM, which oversees technical issues, has sparked debate over the necessity of having an independent regulatory body to avoid reversion back to the service quality seen previously under the Department of Civil Aviation. According to Loke, the decision came after studying Civil Aviation Authority regulatory models in various different countries. He explains that in any country, the technical regulator also regulates economic activities, so they are the sole authority in terms of providing licenses. Loke adds that after researching other countries, it became clear that there was no separate authority. The minister says that with the consolidation, CAAM would be able to restore Malaysia's air safety ranking by the US Federal Aviation Administration, which downgraded the technical regulator from Category 1 to 2. Scoumi Energy Services' indirect wholly owned subsidiary KUB Capital has defaulted on redemption of bonds worth 55 million ringgit. The bonds were due today. According to the BOS filing, Scoumi Energy says that despite not being able to meet the principal payment, KUB will pay the coupon on the Series E of the bond. KUB currently has only 22 million ringgit in the sinking fund, which means it's about 33 million ringgit short of the repayment. Scoumi Energy says that while it had on December 10th accepted MIDF Amanah Investment Bank's offer of bridging financing, it had insufficient time to fulfill the conditions precedent for the drawdown of the financing before the due date. Nevertheless, it notes that there is no legal implication at this stage, as no legal action has been taken by the trustee of the bondholders, TMF Trustee Malaysia or Dana Jamin Nasional. KUB has already submitted a formal request to TMF for a remedial period, while Scoumi Energy is expediting the requirements needed to be able to draw down on the bridging financing. Scoumi Energy is currently classified as PN17, and its external auditor KPMG had earlier expressed uncertainty over the group's ability to continue as a going concern. Trading in Scoumi Energy shares had been suspended today pending the material announcement and will resume Monday. KUB Malaysia's President and MD Dato' Abdul Rahim Muhammad Zain, who has been on the board since August 2015, has resigned to pursue other interests. Taking over will be Group CFO Ahmed Fairuz Abdul Aziz, who starts effective today, according to a BOS filing. Ahmed Fairuz, who has been redesignated as CEO, had held the position of CFO since 2016 and was previously the Group CFO of the Nazar Corp group of companies between 2012 and 2015. Abdul Rahim Ibrahim had spearheaded KUB on its path towards profitability over the past year as the company fell into the red for the fourth quarter of FY18. Earlier this year, he had told reporters that the company was aiming to return to the black for FY19, supported by efficiency enhancement, cost-cutting and right-sizing measures. However, for the third quarter of FY19, KUB posted a net loss of 1.01 million ringgit as revenue plunged 42% to 86.42 million ringgit. CGS-CIMB research is expecting Malaysia's GDP to slow further from 4.4% year-on-year in the third quarter of 2019 and the 4.9% growth seen in the second quarter. In its economics report, the research house says it expects growth prospects to remain subdued while reiterating its forecast of 4.5% for 2019 and 4.4% in 2020. It also says that the loss of economic momentum warrants further monetary policy easing and anticipates that Bank Negara would deliver 25 basis point cuts in 2020. CGS-CIMB adds that at only 0.3% year-on-year, the country's industrial production index in October expanded at its weakest pace since February 2013, coming in below consensus forecast.